Okay, so I last week I sat down and I reflected on the coaching sessions that I've been running now for since 2007. That's more than 450 business owners that I have directly coached, event management companies, graphic design agencies, architects, construction, all sorts of service businesses, mainly some sole traders, so mainly businesses with teams of 3 to 50. So we're talking about a complete range of businesses. And I reflected on what were the areas that we've spent discussing and going into depth on in those sessions. What were the areas that had the biggest impact on financial performance? And I really consolidated that down into the next 40, 45 minutes. So we're not talking here about accounting issues and data and things like that. I wouldn't do that to you guys this morning. What I'm really talking about is some of the macro level financial improvements that any business owner needs to be thinking about. So this is my direct, real world experience. There's no AI here. It's just direct experience that I'm going to share with you. So let's get cracking. And I think this quote from Warren Buffett really sets the scene here on what I'm talking about, and really how business owners create long-term sustainable income for yourselves, and understanding the systems and methodologies to do that rather than just working really, really hard in your business. That is not the smart way to do it. And let's look at why. So the first improvement or mistake that I commonly see: the business equals your pension. So when we first talk to anyone running a business and we ask them about their long-term goals, their aspirations, their retirement plans even, and quite a few business owners tell us, well, the plan is to grow the business and then sell it at some point. Now, that assumption in itself is, in my view, pretty risky. It's a pretty risky assumption to assume that you're going to sell your business and that will fund your future life and future lifestyle. Now, why do I think that is risky? Let me give you some evidence for why that is the case. Now, firstly, then, I call it the gamble, actually. I think it's a gamble to have this as your plan A. Why is it a gamble? Firstly, let's look at the stats on how many businesses in this country actually successfully sell. And there's more than 5 million businesses in this country. Most actually are, the majority are sole traders, but there's more than 5 million now. And less than 0.1% of those businesses sell each year. Less than. And the reality is the vast majority of businesses that get put up for sale do not sell. In other words, even though they're on the market, nobody buys them. Nobody buys them. And I'll explain some of the reasons why in a moment, but they don't actually successfully sell. So typically a business owner, typically in their mid or late 50s, will go for a sale, but nobody buys the thing. So then what do you do? If your whole business life, 10, 20, 30 years has been based on that assumption, and then the thing doesn't sell, what's your plan B? So that's the first thing, that statistically most don't sell. Secondly, I then ask, well, okay, if you want to sell your business, what's your business worth at the moment? What's the current value of your business? And the most common answer is, I don't know. And most owners don't actually understand how their business is valued. What is that? What does that calculation look like? And for most, as a general rule of thumb, it's a multiple of your business profits, as a general rule of thumb. And that multiple is influenced by many factors, which of course you should understand, but it's generally a multiple of profitability. which most don't understand. So they don't understand the value now. They don't understand the value that they're trying to achieve and what profit and multiple they need to achieve in order to hit that sale value. So they don't know whether their business is really saleable or not. They don't know the current valuation. And the third reason why I think this is a bit of a gamble is is there a real market for your kind of business? So, what I mean by that is if you look at, for example, a dental practice, there is a ready made market for dental practices. And when we coach dental practice owners, they almost always want to sell because there is a ready made market to buying and selling and trading dental businesses. That is not the case for many other sectors. It's not the case in my industry, actually. For coaching businesses, there isn't really a ready made market there for us. So I don't assume I'm going to sell my practice because there isn't really a market there. So I could try, but statistically, there's a very low number of buyers. So, really, when you're looking at this assumption, you need to consider all three of these factors. Now, I'm not saying don't sell your business. What I'm saying is understand what makes a saleable business, a saleable asset in the eyes of a potential buyer. At least understand what they are looking for. And so let me just highlight some of the things that they are looking for. Do you even know what they are really looking for? What a professional investor is really looking for? So there's many things, and they will come along. They will do their due diligence on your business, and they will look at many factors. For example, is there a what I call a marketing machine, a system that reliably and consistently generates leads in your business? Are there some sound fundamental financial systems that track profit, that track business profit, contract profit, product profit, cash flow, business development metrics, some of those basic financial KPIs in a business? Again, any professional investor would want to see that that stuff is there, that that stuff exists. They shouldn't have to hunt around looking for it. They would always also want to see some level of the commercial predictability, i.e., does this business know how to make money? Is there a consistent level of profit, ideally growing? They'll look at profit more, even more than revenue. Does the business look? Does it have repeat business? Is there consistent profit? Are those figures going up? When they look at those financial metrics, is that predictability, that feeling that this thing is stable and consistent in its ability to generate cash and profit? And finally, and probably the single most important factor that an external investor would look at is, does it run under management? In other words, is there any kind of management there that is running some, most, or preferably all of the business? So that if you left in a sales scenario, the business doesn't collapse. Because why on earth would a professional investor buy something that's reliant on the person who's leaving? That would be crazy. And these people aren't crazy. So when you look at those factors and you look at your own business, you think, right, okay, well, you could achieve that. And I know that's a goal we look at with those we're coaching, for those who want to sell, how we build this stuff into the business. You could achieve that. But that's challenging. And if you achieve that, great. You could have a really attractive business. But if you don't achieve all of these things, or there isn't a ready-made market, or your timing isn't right, trying to sell a business may be a gamble. So what's the plan B? What's the plan B to effectively provide that long-term retirement income or income for later life, or the pension? How was that achieved if you don't sell your business? And again, when we ask people about this, it's very vague. There isn't that level of clarity on how that will be achieved. And so certainly from my view, we work mainly with service businesses, and if there isn't if saleability is maybe a risky strategy, I would say that the purpose of your business, ideally, then, instead of being a saleable asset, it should also be looking to generate cash flow for investing. So that when you get to a point in life where maybe you don't want to work so many hours, you want to step back, you want to retire or semi retire, whatever that looks like for you. And look, I know most entrepreneurs don't want to retire. They don't want to just sit on a beach and do nothing all day. That is not us. Fine. But this is not about sitting back and doing nothing all day or playing golf. This is about having the freedom to choose whether you step back, whether you have more time off. What if what if your body or your health are not allowing you to work the way you do now? What if you have other commitments in life outside of business and family? And what if you do want to retire and just do other things? How will that be funded? So you should be thinking about your business as a source of cash flow for investing. That could be investing in other assets, be they the stock market or other businesses or commodities, metals, whatever, property, whatever it is. You should be considering other investments to run alongside your business. Because if your business is your only plan, that is a risky plan. Let me really bring this home. Um, Imagine you're a 40-year-old female, female entrepreneur. Um, that means you've got, on average, 45 years left, on average. Um, your assumption, therefore, if you're relying on your business, is that that business will sustain you for the next 45 years, regardless of what happens to you, your health, your priorities in life. It's got to work for you for 45 years as a source of income. That's that in my book, that's pretty risky. That's why I think you need a plan B, and you need to look at investments outside of your business and not rely on your business as the sole source of income or a saleable asset. If you achieves that, wonderful, wonderful. But if you know that's not the plan you're working towards, or not the primary plan, then you need to ensure there's an additional separate plan that can fund your lifestyle and your financial needs that isn't reliant solely on an income from your business. And so that's exactly what I've done with my own business. Yes, I have a successful practice, but I don't want to rely on this practice for the rest of my life. Yes, I love my coaching, and I will probably do some form of coaching for the rest of my life. I'll probably do something, but I don't want to have that pressure of relying on that income source for the rest of my life. So I've removed that need. I've spent 10 years plus making sure that I don't have to be reliant on this one income source from my business. And I know the reason I put this front and center is because whenever I mention this to business owners, they're like, "Oh, I haven't even thought about this," because they're so busy working and delivering amazing things for their clients that this hasn't really this has become deprioritized. It's an afterthought. And then I see owners hitting 50, 55, or even 60, and suddenly the afterthought has become a priority. And they're like, "Ugh, I've got some catching up to do." So I hope that's just making you reflect on the fact that what is that long-term plan for you? How is this question going to be addressed for you? Start thinking about that plan and whether you're going to be reliant on one business and one income source for the rest of your life, which I would say is a gamble. Okay, that's mistake number one. Now, allied to that, guys, gosh, I've got some slightly worried looking faces. Now, mistake number two, allied to that, lack of personal financial goals. So, as you know, I am a big advocate of the business being about more life, not just about the business goals and the clients and working really, really hard. I believe, and I've shown that you can have a business and have a life too. And if you also believe that, then you should also have personal goals written for yourself that includes personal finance goals. So what do I mean by that? What do I mean by that? So, but personal goals, health goals, they're my number one. Income, personal income, wealth potentially as well. The long term, how much wealth you want to create. Time, how much time off, or when do you want to step back and things like that. Relationship goals, family is things like that. All of this should be defined if you believe this is important. I certainly do. Now, here I'm talking about income. So, i.e., your personal annual income or drawings. How much money do you actually generate for yourself from working and running your business? What is that figure? Not what do you end up with. What is your personal income goal? I.e., how much would you actually like? And a good way of thinking about that is what's your market rate salary? If you were working, and I know so many people tell us this, if I was working in this business as an employee, I would be earning 120 grand as a package. Just an example. That would might be your market rate salary as a director of a business. Now, that may be a goal for you. It's up to you. I would define personal income as your salary, your dividend. I'm assuming limited company here. Salary plus dividends plus pension contribution. I would add all three into that. If you're a young 20 something or 30 something entrepreneur, maybe the annual pension contribution isn't a priority for you. I get that, and it wasn't for me at that age. But for most entrepreneurs, you should certainly be considering an annual pension contribution as part of your income package because the government allows us to take 60K a year out of our businesses that can be put into a private pension fund, a SIP, and a SAS, or whatever your pension fund is. You've got your 20K ISA allowances. So you define it however you want in terms of what you think that overall package should be for you to sustain your lifestyle, to sustain your investments. The challenge here is what happens if you don't define any of this? What happens if you don't have a target for any of those things I've just mentioned? What happens if it's just an after, well, it's not even defined. You end up with whatever you end up with. Whereas if you set the goal, it's an intention, it's a direction to say, well, this is what I want. Yes, you may not know how you're going to achieve that. Yes, I get it. Well, how am I going to take that amount of my business? That's challenging. Yes, but at least by setting the goal, you're forcing your brain to start thinking about how you achieve that. But don't let the house stop you from even setting the goal. Otherwise, you just end up with whatever the accountant tells you you can take as a dividend or whatever that figure is after the event, after the year end. It's too late then to do anything about that figure. Some of you have been there, haven't you? You've been in that position. You're like, oh, what is that? Is that all the dividend I can take? Is that because you never set the intention in advance? So if that's important to you, certainly defining this stuff is a great way to start changing the reality of how much you can take out your business. And yes, you need to plan how you're going to achieve that, and we'll come on to that. But it starts with the goal. Starts with the goal. Now, the third thing that I thought about and reflected on regarding these improvement areas is what I call the saver's mindset. And this was me absolutely down to a T in my first 12, 18 months running my business. And I came into my business. I'd been a chartered accountant for years, and I'd been certainly brought up in a family where saving money and conserving money was the norm. That was my mindset. And so when I started running a business, that's exactly the mindset I brought into my business. And it's a huge problem. It was a huge problem because did I hire anyone? I mean, I didn't have much money coming in, so I didn't want to hire anyone. I didn't want to invest any money in marketing or anything else. So 12, 18 months into my business, guess what my income was from my business? It was practically zero because I had a saver's mindset. And actually, when I look at the most successful entrepreneurs that I've worked with, they have completely the opposite mindset. I mean, some people might even call it reckless, but it's certainly a mindset where they are looking to invest and sometimes invest aggressively in building their business, marketing, hiring, whether it's in-house or external. They have that mindset of they have to invest in order to grow a business. They have to invest in order to achieve the goals that they want to achieve. They have to have that investment mindset. It is scary, isn't it, guys? Yep, absolutely. I still remember when I was hiring my first full-time coach in my business. I'd hired part-time people and things like that, and some of the lower wage, lower salary people that many businesses hire. But my first, I suppose, bigger hire, and actually some of you know him, Dan. And I still remember sitting there going, "Oh my gosh, that's a big number." And I still remember going through those numbers with my coach, and this was what was going on in my head. The fear of if it didn't work and what if I lose money and all these issues were going on in my head. And it's the same with anyone. The fear is natural. It is absolutely normal. It's a normal human reaction to be fearful about spending money. Completely normal. Our brains are our emotional centers, our limbic brains are hardwired to protect us. So when we do things that don't feel safe, fear is a natural response. We want to retreat from that. It's a natural response. However, keeping us safe is not a great way to run and grow a business. In fact, it's a great way to kill a business. And so the fear is normal. Everyone is scared. But what I'd also advocate is you need a strategy to manage those risks. Of course, you could lose money. In fact, who has lost money on a bad hire or marketing that didn't work? I certainly have. We all have. Everyone has made mistakes in that respect and lost money. And then I hear things like, well, I'm not going to make that mistake again. And so they retreat from making those decisions. The best strategy I will advocate by far to manage those financial decisions is your cash flow forecast. You should have a cash flow forecast that models the impact of any extra cost or investment. It models the impact of the cost of that hire, the cost of that marketing, or whatever it is. I will always default to that strategy because the challenge is when you're making these big decisions and if you don't have the data and the logic there and the numbers, your emotional brain's going crazy. Oh, what if this happens? What if that happens? Oh, I'm going to lose my, oh, it's terror. I say, no, let's look at the numbers. Oh, let's look at the numbers instead. So if you don't have a cash flow forecast, why not? You really should do, and your accountant or bookkeeper should be able to help you with it. It doesn't have to be some fancy system. It could be a basic Excel file. That's all mine is. Really simple. What are your projected cash money coming in over ideally over at least the next 6 months? What are the projected cash outlays? It's all based on cash, not invoiced cash. And if you don't know what this is about or you don't know much about it, certainly talk to your accountant and bookkeepers about this. But it shouldn't be complicated. What it does do is give you some clarity on the impact of making a financial investment in whatever you want to make it in, rather than just being paralyzed by fear. If that fear controls your decisions, you're going to struggle to make any real progress with your business. And I would suggest you're going to go backwards. So let's use the cash to help us make those decisions. Um, the next mistake are some of the limiting beliefs that we see about money. What is a belief? What is a belief? A belief is something that you personally hold to be true. Now, it might really be true, it might not be true, but it's something that you hold to be true. And most of our beliefs, where do they come from, guys? When are those beliefs created? Those beliefs are generally created, most of those in childhood or before we become adults. And then those beliefs maybe have never been challenged. You've never really confronted those and looked at those and asked yourself whether they're real or not. And so, what I would suggest when it comes to money, I would suggest a little exercise here. And I would suggest you grab a piece of paper and you just write down when I say beliefs about money, you just write down what comes into your head. What are your beliefs around money and wealth and creating that? And you just spend 5 minutes or 3 minutes just writing down, just brain dumping everything that comes into your head. And then after 5 minutes, you look at that list. You look at it and you look at whether your beliefs are overwhelmingly positive around money or negative. And people generally fall into one or the other camp. And the thing I'd ask you is if your beliefs around money are are predominantly limiting or negative, how does that align with your role as a business owner, where part of the job description is to ensure you're creating money and profit? The two are not aligned. And that's a real challenge. Your belief around money may be sabotaging your progress. And I hear this a lot. I hear so many beliefs and they're genuine beliefs and innocent beliefs. Oh, but Prague, I'm not doing this for the money. It's not about the money. Really? I mean, I get it. I mean, there's easy, I'm a coach. I'm not, I used to be an accountant. And if I was looking for an easier way to make money, I should have stayed in my career, to be honest. But But part of the role is absolutely it's about the money. We've got bills to pay, we've got wages to pay, we've got families to feed, we've got mortgages. Well, of course, it has to be about money to some extent. Of course, it's about purpose and impact as well. But if your belief systems around money, that stuff, don't even look at and talk about, and it's bad, then you're gonna have a problem running a business. The good thing, though, is can each of us change a belief system? Can we decide to change a belief system? Of course we can. Of course we can. We can choose to look at a belief system and rewrite it, to change it. We can make that decision should we choose to. Absolutely make that decision. Just like I talking about earlier about my saver's mindset, I made a decision that I couldn't just cling on to that belief around money for the rest of my life because I knew that was going to pretty much finish me off. I had to change that belief. So I did. So I did. And I've kind of gone the other way now, where I barely even think about the money and what I'm investing in. I certainly in terms of I don't stop them there and go, oh, I can't do that. It's more of a higher risk strategy now because I realize that actually I need to embrace that even if I make some mistakes. It's better than just conserving and being overly prudent and conservative. So that's just an exercise for you to look at your own beliefs. The next one is a big one for me. Parag, if I make more sales, I will have more cash in my business. How many times have I heard that? How many times have I heard that? Is that true? Is that actually true? The answer is it depends on your business and your cash model. But very often, look, you look at life cycle of a business, your business, any business. There will be times when cash will be an issue. Some of us have been there. I've been there. Many of you have been there, where you're having a sleepless night because you're running out of money. It's going to happen. And the default I see is I just need to make more sales. Sometimes that may be true. Sometimes that may be a complete fallacy. Because it depends. It depends on what money's going out, your overheads, your payment terms. It depends on a number of factors. And just blindly saying more sales is more cash is simply not true. In fact, I'm going to show you an example in my own business. Um, this is my bank statement. This is my actual one of my business bank statements way, way back in the early days of my business, 2009. Goodness me, I was making the princely sum of £3,425. Um, and just as much was going out, and that left me with £895 in my bank balance. Oh my goodness me. And oh, look at that little handwritten. I'd written in those days, I used to go through my bank statements line by line because I had no money. And I used to go through and look at every item and make little notes. And there's a little note there, includes 1,200 quid of personal cash. So back in 2009, I was hardly had any money and I had to put 1,200 quid of my own money back into the business. Not a happy place. Um, that's what my saver's mindset did to me. Now, I found another bank statement. Gosh, I had some fun looking at my bank statements. 4 years later, 4 years later, here we are, 2013. I was now paying in 11.5K. So I tripled or more my monthly income. But look at how much was going out. My overheads had gone up. My staff costs had gone up. There was 20 grand, more than 20 grand going out the business at that time. So what was left? 2K. So I'd grown my business. I'd made more sales, but the cash flow was, in fact, I was in a worse situation here because I had 20K going out and only 2K left in the bank. So 4 years later, I'd grown my business. The cash situation was even more desperate. More sales did not equal more cash. Not at all. And so, and this is a common story. And I know that these are only little numbers in the early days of my business, but it's a common story. And so what really matters is not making more sales. It's to look at your entire cash model and understand the gap, what we call the cash gap that you have in your business. And the gap is the time, the difference between the money going out of your business as you work on servicing your clients, and it's the money going out of your business on wages, on maybe on materials as well as you service the job and the client, compared to the time you then are fully paid for that work. There is a gap, isn't there? For pretty much every service business, there's a gap between the money going out and the money coming in. And if that gap is not managed and controlled, it doesn't matter how many sales you make, it doesn't matter how many clients you bring on, that gap is potentially going to damage and even kill the business. And we see this all the time, don't we, guys? Multi-million pound, even billion-pound companies going under because partly because they haven't managed this issue. So when we're looking at your businesses, you want to really understand there's so many. I could spend the next 3 hours talking about the strategies to help you manage this. In fact, part of our coaching programs, we have a session where we do exactly that. I haven't got 3 hours today, but what I want you to think about is, first of all, your beliefs that may be getting in the way here. I see some very common limiting beliefs. More clients is going to fix me. Of course, we've talked about that one. If I'm making more revenue, that's an indicator of success. Not necessarily at all. As I said, you could be a £100 million company and go under tomorrow if you run out of cash. More revenue is not an indicator of success. More cash is, more profit is, revenue is vanity. Working with any client is better than no clients. Really? Talk about that one in a moment. Who's ever had a client that they wished they'd never worked with and actually maybe even lost money? So any client is not necessarily better than no client. The relationship is a priority. Oh, this one I see very often. Very often that the relationship, if you call it that, is one where maybe you've allowed the client to beat you down on your fee, on your price a little bit. Maybe they're not paying you on time. They're demanding. They're questioning everything. Not paying you, causing stress to you and your team. And you're sitting there believing that the relationship is a priority. And I look at that kind of relationship and I'm saying, what I'm seeing on the outside is a relationship where the client, the customer is winning. They're getting a great service from you. You're losing. That's a win-lose relationship. That ain't a relationship. That's an abusive relationship, really. I see it all the time. See it all the time. And that belief, oh, we can't upset the client. We can't push back on their demands. We can't do this. We can't do that. And it's just creating more of a win-lose relationship. Certainly for the wrong client, that belief is completely detrimental. And then this one as well. Oh, but Parag, it's okay. It's okay that this, we got beat up on fees and that we're not making much money because we'll get more repeat business. We'll get more work from this client. Great. If you're in a win-lose relationship, guess what you're going to get more of if you get more repeat work? You're going to get more of they're not going to suddenly pay you more money and pay you more quickly and all those good things. If it was a bad relationship in the first place, it's going to continue to be a bad relationship. It's going to continue to be a client that sabotages your business. So you do need to confront whether some of these beliefs, remember what I said about beliefs, something you hold to be true, but it can be changed. You need to consider whether these beliefs, your beliefs, are actually hurting you and your cash flow, because they can be changed. Now, we need to confront the beliefs. What else do we need to look at? What else could we look at to improve your model, your cash flow model? Changing the beliefs, absolutely, as we've just discussed. Your choice of client. If you're working with the wrong clients, If you're choosing to work with the wrong clients, you are inviting these issues. At the end of the day, we all have a choice as to who we work with. And every one of you has admitted that you at some point you've worked with the wrong client who's had those detrimental effects. If that has been your experience, why have you been in a position where you've chosen to work with the wrong client? Why? Simple answer. Which part of your business is not working well enough for you to end up in that situation where you've had to work with the wrong client? Which part of your business is not performing well enough? And of course, that's your marketing. If you're working with bad clients because you didn't have a good enough pipeline, you didn't have a choice, you couldn't afford to say no, that's a marketing issue. You haven't generated enough qualified, good quality leads for you to be able to choose. And therefore, you've chosen badly. And then your business suffers the impacts. That's a marketing issue. Now, the other big one, oh dear. Who is, for most of you, you've got credit terms, you're having to chase money, you've got debtor balances, maybe overdue debtor balances as well. Who is chasing the money in your business? Who has that ownership? Oh, it's me, Parag. For some of you, it's you. For some of you. Now, there's two big reasons why I would suggest it should not be you. Number one, do you have time to do all this? Do you have time to remind, to deal with questions, pick up the phone, remind again, chase? Do you have time to do that? Probably not. Secondly, do you want to do that? Is that a good use of your time? No, it could be delegated. Secondly, what about the emotional impact of having to chase money? When you're the one who's brought on the client, nurtured them, serviced them, looking after them, and now you're the one who's having to chase money. It's a big conflict. That's why you don't necessarily want to do it. You don't have the time to do it, and you're probably not very skilled at doing it. So what it really needs is an owner for that task that's not you, and a process, a credit control process, i.e., a series of tasks, whether it's email templates, phone scripts, or whatever it is. There's a process for when reminders happen, when calls happen, what happens if things don't get paid. There's a defined process for it, and it's managed by someone else, whether that's a bookkeeper, an office manager, a VA, a credit controller. It's someone that sits outside of yourself. Certainly, if you've got this issue in your business and you've had this issue in your business consistently, you need to remove you from the credit control process. And finally, I think in my when I was reflecting on this, I think the biggest reason business owners get themselves into these cash issues is, again, that word fear. Fear. They don't set the right fee levels because of fear that the client will not buy from them. They don't charge deposits or more of a deposit because of fear the client will push back. You don't set the credit terms you want, again, because of that fear. You end up over servicing. Your team ends up over servicing because you're trying to please a demanding bad client. You don't charge for the add-ons because you're worried about what they're going to think. And that fear is literally fueling the cash issues. So, as I said, I could talk about this for hours, but I'm going macro here. And I just want you to think about the beliefs, the process, your response to fear. Those fears, by the way, get fueled if you're hanging out with other people who've got the same fears, especially peers in your industry. You really need to stop that if you've got any chance of managing those fears. You can't just collude with others who've got the same fears, the same beliefs, and that's fueling you to behave in the same way. Okay. Now, final point then. No growth plan. And in particular, no growth plan for profit. So again, when I ask business owners, well, how are they going to improve their financial situation? How are they going to make that work? And firstly, I say, do you have a written marketing plan? No. Occasionally I'll hear a yes, but most have no. Okay, so tell me what your marketing plan is, and I'll get some vague. Oh, we need to do more marketing. Okay, what marketing? How many channels? How often? What's your target number of leads? Let's get some definition. How many strategies? How often? How many of X? How many LinkedIn posts? How many webinars? How many email campaigns? How many? Something that can be measured. That's the basics I would expect to see in a marketing plan with owners. That's the basics I would expect to see. But that alone is not enough, actually, because that should help you with lead gen. Great. But revenue is vanity. We also need to look at how you're going to grow profits. So on my previous webinar, which was called where your growth opportunities are hiding, where the opportunities for growth hidden. It's on our YouTube channel, by the way. So if you subscribe to our YouTube channel and like and look at the content there, all my webinars are saved there. So you can go back and refer to that one. But in that webinar, I shared our business growth system. It's called our 5 Ways Business Growth System. And my point here is, if you've got a marketing plan that addresses what I've just mentioned, that should help you with your number of leads. That should help you improve your number of leads. Great. But this business growth system is based on 5 ways to increase your revenue and profits, not one. So lead gen will help, but do you have a plan for how to increase conversion rate? Or number of transactions, which is repeat business, or your referral rate, or your average sale value. Or, and this is a big one for service businesses, or your margin per project, your margin per client. That's a real significant improvement area for many, many service businesses. I talk about it a lot more in that webinar. Because if you look at this system, our goal is to help you increase each one of these 5 ways areas by 10% per annum. And if you multiply those improvements through, you look at the revenue of that business has gone from 200 to nearly 293,000. That's a 46% increase. Because what we've done is increase each area by a small marginal gain of 10%, which then multiplies and compounds through across multiple areas. So you get this compounding effect. If you do the same on your margins as well, you increase, you look at some of those pricing issues I mentioned, but we also look at efficiencies of execution. You look at some of the margins as well. The profit of that business has now gone up by 61%. So when I talk about growth plan, I'm not just talking about marketing. I'm talking about marketing's important, but there may be other more significant areas of improvement outside of lead generation. They may be the quicker and easier wins for you. So there's what I've consolidated from 19 years of coaching sessions. And as ever, I'm going to get you to think about your next steps. As I always say, the education, the insights, the light bulb moments are great. What are you going to do with that? What's the one thing or two things that you could take away from today that you can implement? You may need to go back and subscribe to the YouTube channel, watch some of the other webinars, great, but take a tangible action as well, because the improvements won't come until you take action. Thank you for your time. Thank you for listening. I will